Money matters. The rand remains under pressure as the country continues to be battered by its worst rolling blackouts on record. At some point in the day, the rand traded at around 19 rand 30 against the dollar. For more on the rand's trajectory and the state of our economy after yesterday's GDP data, we're now joined by Bianca Botes, Executive Director at Citadel. Thank you very much, Bianca, for your patience with us. The rand is still trading well above 19 rand to the dollar. Help us make sense of what's influencing trade today. How much is our own doing, and how much is global factors?
Good afternoon to you and the viewers at home. As you mentioned, the rand remains under pressure. We're currently hovering just above that 19 rand 20 mark. And this comes in a time where there's quite a bit of uncertainty, not only locally, but also on a global spectrum. Global risk-off trade continues to see elevated demand for safe haven assets, while locally the government spending freeze, as well as the most intense power cuts on record, weighs on the sentiment on the ground. This is really painting quite a dismal picture of not only the local fiscal situation, but also the economic future of South Africa, given these intensified power cuts.
South Africa's economy grew in spite of expectations in the second quarter, reflecting the positive impact that June's moderation and blackouts had on the economy. Stage 6 is back, though. How much of a bearing will that have on growth prospects in the next quarter?
So we've actually seen that PMI data ticked up from August to September. And that paints a good picture in terms of private sector growth. But when we start looking at GDP growth as a whole in South Africa, there's a couple of structural issues that remains at the heart of poor economic performance. And one of the key risks here are definitely our energy crisis that we are facing at the moment. We cannot as a country expect to see any significant GDP growth unless we can solve the power situation we are facing. So those GDP figures showed us a year-on-year increase of 1.6% versus the expected 1.1%, and quarterly we saw a 0.6% climb. And while this is a positive figure, it's not really something to get too excited about, especially given the risks that lie on the horizon in South Africa.
Brent crude oil hit $90 a barrel. What's driving that surge, and how much of a pinch will this be for our already high fuel prices moving forward?
So oil prices jumped after Russia and Saudi Arabia extended its supply cuts. And we've actually seen that OPEC, with predominantly Russia and Saudi Arabia, really putting pressure on exactly how much they are producing, how much output they are delivering. And that's in a way to keep the oil price elevated for their own benefit. The rise in oil prices to the highest level this year, coupled with a sustained weak rand, will pain consumers even further. And that obviously comes after the steep rise in fuel prices that took effect today.
Okay, let's take a look at the S&P Global South Africa PMI. It increased to 51 in August 2023, pointing to the first expansion in private sector activity in 6 months and the biggest in a year. What's driving growth?
So as you mentioned, PMI rose to 51 from the previous 48.2 reading that was released in August. A reading above 50 indicates that there is growth in the manufacturing index. Companies reported increased output coupled with a slower pace of cost associated to this output, while demand remained largely steady. However, as we mentioned during the discussion on the GDP, should we want to see the strength sustained in South Africa, we need to start addressing those structural issues specifically around Eskom to ensure that we can maintain growth.
So Goldman Sachs Group now sees a 15% chance the U.S. will slide into recession. Talk us through this forecast and what ripple effect it may have on emerging markets.
So the reading is actually quite positive because Goldman Sachs actually cut their forecast from a 20% probability to a 15% probability of a U.S. recession, as inflation in the U.S. slowed and the labor market remains fairly robust. And this basically reinforces the view that the Fed will likely not have to continue hiking rates, and that they will in fact just keep it steady until they reach a point where they feel that inflation has cooled enough that they can start cutting. While the U.S. is not entering into a recession, And that is good for the global growth environment and will assist with market sentiment. There are, however, some other woes that weighs on sentiment and the global growth story. Poor economic performance from China continues to weigh on emerging markets, and we actually see that dampening the South African economy. And then South Africa also faces its own economic woes, as we previously discussed, the fiscal position, the electricity crisis. And even if the US misses a recession and global growth starts picking up, we will have to address our own issues to make sure that South Africa can actually partake in that global growth uptick once we come out of these hard economic times as a globe. So we need to make sure that we don't fall behind. But overall, the US not going into a recession paints a better picture. It revives a little bit of sentiment, and we can get some benefit in the emerging markets from that sentiment.
Okay, thank you very much. Bianca Botes, Executive Director at Citadel Global.